What is good, Crypto Paradise family? My name is Crypto Amaru. It is Thursday, February 27th. The market is looking pretty shitty, and I'm here to provide some words, maybe of encouragement, maybe some coping, maybe some just, let's just hang out and talk for a little bit here. A few housekeeping items before we get into my take on how to handle yourself during these big market corrections. One, remember to check out Crypto Paradise X account. Check out the Paradise pad while you're at it. We're the only channel giving away 3 free nights to Tulum, Mexico. So hit us up if you want to join us on a beautiful tropical vacation. Second thing I want to talk about is keep an eye out for more information on the Surf token. That is going to be this channel's native token, fair launched on Pulse Chain with reflection rewards going back to token holders and access to pre-sales. So super pumped for that. More information coming. All right, we've just been through a 20+% correction on Bitcoin, ETH. Everything is down majorly. Looks like maybe we're stabilizing here, despite the fact that more news about tariffs keeps dropping, seems like every day, and that's been, I think, the primary cause for the weakness overall in the markets. A lot of it's been manipulated and manufactured, but that's been the ostensible sort of public-facing reason are these tariffs. But what do you do? What do you do during these periods, right? Well, first of all, it matters what you did before. Let's just be honest, right? We always talk about these truisms, these statements that everybody says in crypto to newbie investors, to older investors, one of which is don't invest more than you can afford to lose. Moments like this and the test that they provide to you that sometimes you'll fail by panic selling the dip, that's why you don't invest more than you can afford to lose. These moments, because the market is volatile, you'll have violent moves down, it will tempt you to panic sell the bottoms, and if you do, you'll have probably lost money, and if you couldn't afford to lose that money, that you're in a bad place. So don't invest more than you can afford to lose. We know that. We say it over and over. Today or the last week, let's say, stark reminder of that. Second thing I like to talk about, maybe not talked about enough in this industry, is diversification. I don't mean holding, 5 different kinds of meme coins or something like that. I mean having a diverse portfolio within crypto and outside of crypto, right? The stock market the past few days has been down a bit, but when the stock market goes down, it's 1%. That's a big loss on a day in the NASDAQ, right? S&P 500. Certain companies, specific companies may experience a little bit more volatility than that, but for the most part, you're talking about relatively small volatility. It's long-term growth in the stock market over long period of time. Ideally, you're looking at 8 to 10% returns a year if you're in some of these more conservative, ETFs that just capture a diversified basket of the entire stock market. I recommend those through Vanguard, low fee, diverse, low risk, but slow growth over time. And if you factor in the compounding nature of that investment, in 30 years, your stock portfolio will have done pretty damn well. You're not going to get rich overnight, but these moments in crypto are why you have that other investment over there. Or perhaps real estate. Perhaps you've been fortunate enough to buy your own home or a second home or a vacation place. Or maybe you've gotten involved with a platform like Limpid that does fractionalized real estate. There's one called YakDAO that we like. There's different ways to enter real estate. But that's also an investment that is going to provide you some peace of mind, maybe a bit of passive income as well at times, so that you feel, okay, I can withstand this volatility over in the crypto markets. I have some, I have a home over here. I have a vacation rental over there. And I'm feeling good, and that's slowly going up, appreciating value over time, generally speaking, as well. So real estate's a good option, right? Or within crypto. Let's get back to crypto for a second, because I think a lot of times, and a lot of people, at least within crypto Twitter and the trenches and all that, they're not even holding Bitcoin at all. And if you're just fully in alts, low cap alts, memes, whatever, you wish you were only down 25%. You're probably down 50, 70, 80% from all-time highs, 90% in some of these cases. So to not have any Bitcoin I think that's a bit of a mistake. A lot of people, honestly, they just have altcoins, and I'm always baffled by this. Presumably you got in this space because you found out about Bitcoin. You researched it. You learned about sound money principles. You learned about decentralization, being your own bank, finite asset class, right? All the wonderful things that we know and love about Bitcoin. And yet somehow you've decided over the course of your journey in crypto to completely abandon Bitcoin. That to me is also a mistake. So have some diversification. Have some big caps. Yeah, they'll take hits if you've just been holding them. They will go down at times. But your portfolio won't look nearly as bad as if you were just all in on altcoins, right? So have some diversification. That's point number 2. Point number 3, understand the market that you are in. Understand that crypto is volatile, it is cyclical, and that in fact these 20 to 25% or higher drawdowns are in fact common in bull markets. You might not think that, bull markets only price go up. No, of course not. It's volatile in crypto at all times for the most part. There's moments where, we're basically consolidating and not a lot's happening, but there is a lot of volatility, and having these large drawdowns in bull runs is very common. In fact, the last bull run, 2021 into 2022, there were, I believe, 6 drawdowns of 25% or more, and one of them was a 50%. Remember the May of 2021 crash. It's a distant memory now, probably, for most people who are in the space, but that did happen. And then all-time highs by the end of that year, by, I believe, November of that year. So these drawdowns, 25% or more, are, in fact, common even during bull runs. So that should give you some peace of mind just knowing that fact. But here's the other thing about understanding the market that you're in and why I hope you tune into this channel. If you understand why the market is crashing, if you understand where you are in the cycle, if you understand the macro sort of outlook, and of course, nobody has a crystal ball and knows exactly what's going to happen tomorrow. But if you're completely flying blind, if you have no knowledge and no understanding of the markets, of concepts related to the Federal Reserve and interest rates and financial policy and monetary policy and quantitative easing, quantitative tightening, I could go on and on with these terms. But if you have no even base knowledge of this stuff, you're going to be lost. It's going to feel overwhelming. Why is it crash? Oh my God, if it's crashing and I don't know why, maybe it's going to crash to zero. I promise you this right now. I don't make a lot of promises because life is unpredictable and things are unpredictable. But I promise you Bitcoin is never going to zero, okay? There's always me someone that wants to buy it even at bottom barrel prices. And I don't want to go so far as to say I promise that we are not now moving into a multi-year bear market, aka a crypto winter. But the probability of that is extremely, extremely low. And here's why. We are in a market that's very cyclical, and it's driven by the 4-year halving cycle. We had the last halving event, Bitcoin halving event, where the rewards that are issued to miners every time a block reward occurs, about every 10 minutes, that amount gets cut in half. It was just cut in half, the halving, as it were, last April. And if you look historically, what occurs from that point on is the start of a new bull run. The first year of the halving, the halving year, is usually sort of that slow grind up. And that's what we saw. And there's with corrections along the way. And that is what we in fact saw during 2024. Then the year after the halving, that would be this year, is normally the year of the parabolic move, that violent move that Bitcoin doubles or triples in price, and then has a blow off top even at the end of that year, typically, or really every time. That is the historical precedent we are dealing with. And so to say that the 4-year cycle has been somehow invalidated, I suppose it's possible. Anything's possible. but you'd have to have a really damn good reason for that to happen. And I don't think we've had a good reason. I don't think that this 25% drawdown, ostensibly because of the threat of tariffs or the quote-unquote tariff war that Trump has initiated, essentially, I don't think that's a basis for creating a crypto winter when historically that has never happened before the year after the halving. So you have to understand these things. Knowledge is power. Knowledge is money, as we say. You have to understand the historical precedent. You have to understand where we are in the cycle. And then you have to understand why did the crash happen? Well, because not all crashes are created equal, right? Not all crashes are created equal. We've lived through a lot worse than this crash. For those who were around in 2022 when FTX imploded and there was a massive run on that exchange, people could not get their money out, incredible amount of trust in the industry was destroyed overnight. There were real questions, I think, in everybody's mind, and that was, by the way, pre-ETF, right? That was pre-Bitcoin ETF. Institutional money was not really as much of a thing. It was not as, sort of ingratiated into the larger financial ecosystem. Bitcoin was still kind of off and niche and weird. When FTX happened, and the trust that was lost, and the money that was lost, and by the way, the fact that that occurred at the tail end of a down year, and it caused the price to crater even further, that was a very different, very, very different, and almost an existential crash relative to what has occurred over the past, say, month with these tariff wars, which really are just an extension of the fear that the markets have around inflation making a comeback and the Federal Reserve not being able to cut interest rates and having to potentially increase interest rates. But the operative word in what I just said is fear. It's not a thing that's actually has actually happened yet. They're worried about what might happen, whereas the FTX thing happened. People lost money. That exchange died. It imploded. That guy went to prison. SBF went to prison. A whole, debacle. Front page of the New York Times. All that stuff. That happened. This is just fears of what might happen. And I think these fears are actually quite overblown. If you listen to my recording from yesterday, I gave a number of reasons why there's a very good chance that the Fed will actually cut rates this year. A couple more times perhaps than even the markets are guessing they will. And that is because for a multitude of factors, really, but the economy is weakening. The economy is not doing great. And you could attribute it to all manner of different things. Trump, high interest rates we've had for a long time, different policies. But the numbers are indicating that the economy is cooling down. And you have to understand the dual mandate of the Fed, right? It is to keep interest rates around 2%. That's their goal. To keep inflation at 2% annually, right? Make sure prices only rise by 2% annually. We're about 3% now, so it's not like we're so far off. We were at 9% not that long ago, right after COVID. So we've gotten it down to almost the target. And then the other mandate is a full employment. They want the economy to be doing well. And right now, to me, there is a good probability that the economy is going to weaken a bit more. The labor market's going to start looking a little bit more shaky. And that inflation actually will start coming down. These tariff fears are no more than fears of what might happen. We don't really know what's going to happen with the tariffs because they are being enacted in sort of a wider context. And that wider context includes things that have never really happened before. The sledgehammer the chainsaw, I should say, that they're taking to the federal government and cutting a lot of spending, a lot of jobs. That's the new context. Another new context, a restriction on immigration. We haven't had that in a long time. It's been pretty open borders around. Now it's not. So what's going to be the impact of that? These tariffs, do they end up doing what Trump hopes they'll do, which is onshore more businesses and bring back more jobs into the U.S.? Or is it going to do what I think maybe a lot of the mainstream economists fear, which is just foreign producers will continue to ship their goods here, but the cost of them will go up, and then inflation may go up as a result. We don't really know what is going to happen, but this crash hasn't been because something catastrophic happened. It's because people are worried about what might happen. And the fact is, no one really knows. But I do know a couple things, and that is the long-term trend over the past, say, year of the inflation data has been going down. Yes, there's some spikes. End of the year, we had a bit of a spike, but the long-term trend is down. Okay, great. That's good. That gives Fed cover to cut the rates. By the way, the Fed doesn't really want these high rates. It means they got to pay a lot more money towards the debt. So they don't like it either. Nobody likes this. Trump certainly doesn't like it. Regular taxpayers and citizens don't like it because home loans and auto loans and everything cost so much more. They want to lower the rates. The data hasn't allowed them to lower them quite as much as they wanted to. And they got a little scared, I think, at the beginning of this year because of all the uncertainty. But the economy also weakening a bit, the labor market also weakening a bit. You combine those two things, and I do believe the Fed will be cutting rates more than twice this year. And we'll see what happens. By the time this video is out, the PCE reading will have been out, and we'll see what that number is. And if it's below expectations, the market will start to pump again. Now, I don't think we have a V-shaped recovery. I still think there's a lot of uncertainty. But you need to understand the macro scenario. You need to understand why the crash happened. This is not a catastrophic, existential, oh my God, the industry might die, we're going into a crypto winter. This is really your run-of-the-mill 20 to 25% drawdown, which are quite common during bull runs. And so if you were diversified coming into this, if you didn't invest more than you could lose, and if you understand the general picture and the cycle and the macro scenario, if you're armed with this information, then you feel a lot better. I'll just be honest with you. I looked at my portfolio, my main portfolio. Yes, it is down 25%. And do I wish I had sold some ETH and, I never sell my Bitcoin. But do I wish I had sold something back when price was at 4,000? You bet I do. And that's one of the, other takeaways, I guess, is let's take some I got to remember to take some profits next pump. But in any event, yeah, sure. Do I wish all that? Of course. But yes, my portfolio's down. It's currently just numbers on a screen. I'm not intending to sell now. I am diversified. I have an income. I'm not relying entirely just on my portfolio to, pay for my bills or whatever. I didn't invest more than I was afraid to lose. I'm not going to panic sell the bottom. I understand where we are in this market cycle. I am feeling okay. I am feeling okay because I'm armed with all these things. Now, granted, I've been in this space for 8 years, and there were definitely crashes where you're, oh my God, is crypto going to zero? Did I make a mistake? What do I tell my wife? I get it. This is not fun, and it's scary at times. But if you just understand these basic things, and you just follow the basic rules, then I think you're going to be okay, and we're going to get through this. Now, I don't know how long it's going to take for us to hit all-time highs again. It might be another 3-6 months. Who knows? We might get a wonderful V-shaped recovery because of some catalysts that come, fingers crossed, Bitcoin Strategic Reserve. But it may be a slow grind up, right? And so we'll have to see. But just follow the basic stuff. Arm yourself with some knowledge. Follow the channel. Hit us up if you have questions. We're here to help you guys. At the end of the day, that's what our role is here within this ecosystem as well, is to just impart some of the knowledge that we've learned over the years to help others make sure they don't make similar mistakes and that they're able to benefit and do well within this industry, as challenging as it can be. So hit us up. We're here to support. We're here to help. Arm yourself with knowledge, guys. And until next time, we'll see you on the beach. Peace out.